Hey viewers, you are watching the Savera and I'm Manpreet Kaur. We begin with global commodities, where silver price surged nearly 2% in international market today. The sharp rise comes after new export restrictions announced by key producing nations, raising concerns over tighter supply in month ahead. Analysis says the move has triggered fresh buying interest, with investors viewing silver both as an industrial metal and a safe haven assessed amid global uncertainty. The rally has also supported domestic silver prices, offering gains to bullion traders and commodity investors. Meanwhile, Indian equity market witnessed mixed cues with notable pressures seen in cigarette company stocks. Shares of major tobacco firm declined sharply after concerns over regulatory tighten and taxation risk resurfaced. Market experts note that while cigarette companies have traditionally been defensive plays, raising compliance cost and policy uncertainty are weighing on investor sentiments. Turning to the primary market, the National Stock Exchange has highlighted a strong performance by IPOs in 2025. And NSE officials revealed that over 220 companies collectively raised more than $20 billion through public listening during the year. The robust response reflects growing investors' confidence, deeper capital market, and sustained participation from retail as well as institutional investors. Market watchers believe the IPO pipeline will remain active in 2026, supported by stable valuations and improved corporate earning visibilities. In the auto sector, data released today shows a 26% year-on-year surge in passenger vehicle sales in December. The strong growth was driven by festive demand, improved supply chain, and continued preference for SUVs. Auto manufacturers have welcomed the numbers indicating consumer demand despite inflationary pressures and higher interest rates. Analysts, however, cautions that sustaining this momentum will depend on financing conditions and fuel price trend in the coming months. Finally, looking ahead to the derivatives market in 2026, experts say higher participation, increased volumes, and tighter regulatory oversight. With rising retail interest and growing use of derivatives for hedging, regulators are likely to focus on risk management and investors' protection, even as market expands. In summary, today's market narratives reflect commodity sector-specific pressures, a strong IPO ecosystem, resilient auto demand, and evolving derivatives landscape. As move into the new year, investors will be closely tracking global cues, policy signals, and corporate earning for directions. That's all for now. Stay tuned with the Savera. Do like, comment, and subscribe our channel.